Hey guys, how's it going? Sandy from Magoo Investing. I got my new phone in the mail finally after some difficulties with the UPS, and hopefully the videos look a little better and I'm able to use my correct mic instead of having to use AirPods. With December coming around, we start getting close to New Year's, and with New Year's you have New Year's resolutions. So in today's video, I wanted to talk about 3 tips that I would have to someone starting relatively new when it comes to investing in 2022, because when I got started, when I looked on YouTube, I found a lot of channels that were investing with, $100,000. That's great, and you can probably learn a lot from those channels. The problem, in my opinion, is that it's not comparable to what most average people are going to be starting with. So these are mainly designed for people that are, just normal young adults. It can be 18 to 30. There's really no age that goes along with investing where you need to start. Everyone knows the earlier you start, the better, but these tips can apply to pretty much anyone that is getting going with investing for the first time. So the first one, and I think the most important one, is to not obsess about results. People know that on average the stock market returns around 10% per year. That's an average. With averages, you have ups and downs. We have the pandemic. You had this huge crash where the stock market fell 40% within the span of a couple weeks. Since that point, we've had an incredible recovery, and stocks are up much higher than most people anticipated. But the 10% is an average for the past 100 years of the stock market. So during that time, you have ups and downs even during the year. 2021 has been a very stable year for the most part, but now in the past week we've had some news come out about the new variant that has spooked the market. And this tip, I think, is very important to not really focus on the day-to-day movement of the stock market. I think it's important to have an understanding of why the market's moving the way that it is, but I think it's important not to obsess about the dollar amounts that you're making or losing every day. When I got started, I put too much money into my account at the first time because I knew that it was too much, because I would obsessively check it and compare how much money I was losing to how much money I was making working my job during that day. I think looking at your stocks maybe every couple weeks is a good way to have a general understanding of the direction of the companies that you own. But I think checking it every day and obsessing on whether or not it's going up or down is really negative to people getting started. I think once you get used to the psychology of seeing your money move up and down every day, you can check it as much as you want. When I drive home from work, I ask Siri, how did the stock market do today? Because I want to have a general understanding of what happened. But I think obsessing over the couple dollars that you're up or down on a given day isn't healthy for new investors, and that's my first tip for people just getting started. Number 2 is picking companies that you fully understand. I see this bad trend of people buying into companies, especially ones that are talked about on Reddit or other places where people are discussing investment ideas, is buying companies that they don't fully understand. These can be companies in a sector that maybe you don't know, or an international company that people are talking about. When you see a lot of people talking positively about a company, it becomes very easy to buy into that hype and buy into that stock. We've seen this a lot with stuff like Wall Street bets. I have no problems with Wall Street bets, but one of the problems that happens is when things go poorly, if you bought into a stock that you don't fully understand, you're more likely to sell it at a loss instead of riding it out. The way that I like to pick stocks, especially when I was getting started, was it had to be a company that I used on a regular basis, or I know people that use that company. This is something like Peloton. Peloton has had a rough couple months after a fantastic 2021 as a stay-at-home stock. But since I understand how the company runs, their mission, where they're going to be going in the future, I'm pretty confident holding it, even though it's had a really tough time. So I think buying companies that you fully understand and stuff that you have confidence in allows you to weather the storm if you have maybe a bad news story or a bad earnings report. And because selling at a loss isn't great. It's important to know when to sell, but for the most part, selling is not something that long-term investors should be doing, especially if you're relatively new to the stock market. So my number 2 tip for investors that are just getting started is to buy companies that they fully understand. And number 3, and I think the most important tip for newer investors, is to continually add to your positions. This is a problem that I've had. I've been investing in the stock market for maybe 4 years at this point. And one of the problems that I have still to this day is I want to hold on to a lot of cash on the sidelines. If you've paid attention to my channel at all, I always talk about having cash on the sidelines to take advantage of opportunities. I should be having this money sitting in my checking or my savings account, not in my investment portfolio. The problem that I have, especially with the market going up and down a couple of percentages, is I'm waiting for the perfect opportunity instead of just buying and holding for the long term. You can look at the numbers. I don't have them on hand right now, but the most successful investors are ones that continually add to their positions, and they're not waiting for one major drop in the market. Obviously, if you could have predicted exactly what day the bottom of the stock market crash from the pandemic was going to happen, you would have made a lot of money. But 99.999% of people aren't going to pick that correct date. And I think that having recurring investments set up from your account will allow you to dollar cost average. Dollar cost averaging is buying a stock or multiple stocks on a regular basis regardless of price. And so the way I have this set up right now is every week $50 from my checking account goes into my TD Ameritrade account. And then when that money is kind of accrued to a point where I can buy individual stocks, I buy a stock that's already in my portfolio. And with my cryptocurrency portfolio, I have $15 go in every Monday and automatically buys Bitcoin at whatever price that it's at. This allows you to continually add to your positions without having to wait for these fantastic opportunities. I do think it's really important to have money set aside, maybe not set specifically for investments, but to have a large enough safety net where if stuff does happen that really crashes the market or spooks whatever stock that you're owning at the time, that you can take advantage of it. But I think holding too much of your cash on the sidelines waiting for that moment really has you miss out on some fantastic opportunities. And the longer you can keep your money in the market, the more beneficial it's going to be over the long run. So in summary, the first one, just don't check the market every day. Obsessing over the market is a great way to make it not fun. Investing should be a way to give you benefits in the long run, not something that you obsess about and really affects your mood on a day-to-day basis. So checking it every couple of weeks, or maybe when an earnings report for a company that you own comes out, you can look at it, but checking it every day and obsessing how much you've made or lost during that day and having to determine your mood, I think is a really tough way to start investing, because we're trying to do this for the long run. Number 2 tip is going to be buying companies that you fully understand. If you fully understand a company and it falls 15% within a week, you're more likely to hold on to it and maybe even buy in and lower your average price. If this is a company that you've never heard of and you really don't know what they do, maybe you start having some doubts about the long-term potential of the company, even though you've heard a lot of people talk positively about it. So buying companies that you fully understand allows you to weather the storm and not sell at a loss, because selling at a loss is important and there is a time and place to do it, but for most people, we're trying to avoid that. And then number 3, I think one of the tips that I can really follow going into 2022 is to continually add to your position and not wait for this perfect opportunity. Opportunities do come around, and I think it's important to be able to take advantage of that, but having 25%, 50% of your portfolio sitting in cash waiting for the stock market crash that may never come is a great way to miss out on a lot of the steady gains that you see in the stock market. The way that you make your money in the stock market isn't based off of these incredible days where a stock has a fantastic earnings report and it goes up 25%. The money is made over the long run when you have these days where the market's up 0.5% and it does that 3 weeks in a row. It's not the most attractive way of doing it. You're not going to notice, oh wow, my portfolio is up a huge amount in a short amount of time. But the stability and the overall time in the market is how you really take advantage of the long-term potential of the stock market. So those are my 3 tips for people that are just getting started going into 2022. This is a tip, especially the third one, that I need to follow going into 2022. And making these videos is a great way to remind myself that I need to follow my own advice. So let me know what tips you guys have for people just getting started and investing in 2022. If you've made it this far in the video, be sure to like and subscribe the video. I would really appreciate that support. You can follow me on TikTok at McGooInvesting, and I appreciate all support. I will see you in the next video. Thanks for watching.